example here, but if you could identify and speak to what you see as the biggest risk that investors face.
So I think the biggest risk, and this is a big part of why we sold the properties actually, I think the biggest risk that investors face is actually the economy. And that's going to sound very strange given that we've got, the best unemployment rate in 50 years and the economy is chugging along pretty quickly. That's precisely the time at which the economy becomes a risk. The economy is not a risk after a crash. After a crash, all the risk is out of the economy. That's when growth starts, right? Again, so you're stepping into things as they're on an upswing. When you're at the top, the only place to go is down. I think a lot of people are hoping that we're somehow magically going to stay at this, at the height of the economy for the indefinite future. And that kind of hope is getting priced into deals. So people are pricing in, high employment. They're pricing in record high occupancies. Right? They're pricing in rent growth that may or may not happen, but it all really depends on continued economic growth at the pace that we have it right now. So people are paying a premium for properties based on economic news, which honestly, if you look at history, cannot sustain itself. And it can't sustain itself for very much longer. And, for instance, when employment reaches a peak is when it starts going down. Like that's sort of basic economics. If you follow the economic, analysis, that's a lot of people writing right now. I mean, that's pretty standard. A lot of people are trying to figure out when this next recession is going to come. They're spending a lot of energy doing it, and they're bad at predicting it. But I think everybody knows that something is coming. But in multifamily world, I feel like a lot of people are really turning a blind eye to it, or they're kind of giving some lip service to the fact that an economic downturn is going to happen in the not too distant future, but they're not really adequately planning for this risk, right? So, so I think that is the biggest risk. I think another big risk, and it's related, is and this relates to a big reason why we sold, if you're dealing with C properties, the tenant class in C properties, this is also often referred to as the renter by necessity class. They're people who, they've got jobs, they can pay the rent, this is market rent territory, but in an economic downturn, they will be hurt the worst. They always are. In the last downturn, we had, I think, 11% unemployment at the peak. But if you look at people with a 4-year college education, their unemployment rate peaked at about 3%, which means that for everybody else, it was much higher, right? And the further down, and literally, the charts will show you, by education, the less education somebody had, the higher the unemployment rate was. So if you're owning a property or looking at properties that are C-class properties, you're taking a big, big risk that when the recession comes, you're going to have a lot higher vacancy, right? And there's another mythology around multifamily investing, which is that rentals do well in recessions, right? And that mythology comes from two things. One is that multifamily does better than other asset classes in recessions. It's more resilient for the reasons we talked about before, because people don't go out of business, right? So it does better. But I mean, by better, if you look at the last crash, multifamily, I think, fell in value by only 32%. It was the best performer of all the asset classes because it fell by only 32% in the last crash, right? So which means the others did much worse, right? So because of that, people have conflated that. And then also after the last crash, when we had the foreclosure crisis, then a lot of people moved into multifamily who had been owning before. So occupancy really shot up. But they've also conflated that with the recession. That didn't happen during the recession. It happened after the recession. But times were still bad, so they still think of it as the recession, but it wasn't. So when people say multifamily does well in a recession, if they're buying based on that assumption, they're really making a big mistake, because it just emphatically does not do well in a recession. It just does less bad than other asset classes do.